All right, welcome to Coffee with Marcus and Mark. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. Today is Tuesday, November 15th. And wow, yesterday, stocks snapped a 2-day rally and closed lower. But today, the all important PPI inflation report was released. So, how did the markets react? And more importantly, how do we trade these markets? Okay, if this is your first time here, I'm Markus Heitkoetter. This is my head coach, Mark Hodge. And we're real traders who trade live accounts. So therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. And crazy these markets are.
You're right, Marcus. Everything just kind of tied to last week's CPI data and then the follow through, right? Consumer prices coming in lower than expected. And then today we had the follow up measuring wholesale inflation, and that was that PPI data report. We see that came out 0.2%. So a rise of cost of 0.2% for the month of October. This was compared to the 0.4% that was expected. And core PPI, we see that there flat, no change versus a 0.3% forecast. So traders liking that follow up to CPI data.
Yeah, so this is where we have to switch over to a 5-minute chart, and we're going to the E-mini Nasdaq futures, and we see that when the report came out, a huge, massive move. Let's just measure this move. I mean, this here is almost a 1.5% move. So at some point, the Nasdaq was up more than 3% this morning going into the open, but then a little bit of the excitement is fizzling out here.
Yeah, you could definitely see that. I mean, we're still up, a percent in the S&P and almost 2% in the Nasdaq, but you're absolutely right. It seems like a little bit of an overreaction or woohoo, let's get excited, but okay, that's kind of you would expect based on a strong CPI report, right? And the fact is, the Fed's still doing their thing.
Right, and we talked about it this morning with our mastermind members. I mean, the deal is the Fed is not stopping raising interest rates. They will still raise interest rates. But, and this is where yesterday we had some news from Fed Vice Chair Leigh Bernard, said it might soon be appropriate to move to a slower pace of rate hikes. Okay, because we have been raising them 75 basis points. So now maybe half a percentage point, but they're still raising it. It's not that they say, well, it should be appropriate to stop raising interest. No, it just we'll keep raising it just a little bit slower. But I mean, this is where market participants see a light at the end of the tunnel, and it doesn't seem to be a freight train.
Exactly. And I think that's the key takeaway here. All things considered, this is positive data. This is what the Fed wants to see. This is what traders want to see. And so they got excited about it. But we're still in a high interest rate environment. There's still high inflation. And so now we have 2 data points, which is a good start. But we'll have to, see when that shift to a reduction of interest rate comes. And that's not anytime soon.
Yeah, but it's overall good news because Walmart also came out, reported earnings, and they actually had very, very strong earnings from their grocery section.
That's interesting, and it actually was huge. I mean, you have the numbers there. So Walmart, what are they up now? Almost 8%.
Yeah, they're up 7%, 8% now. Yeah. For Walmart, that's a huge, huge move.
Yeah, they also boosted their full year guidance. So that was positive, and it seemed to kind of set the stage for retail in general to rally, in addition to the positive PPI news.
Yeah, that's we'll see because Target is reporting. They're reporting tomorrow, but right now also up 3% because everybody's hoping. Okay, what's good for Walmart should be good for Target. But again, Walmart already clued us in and said it's mainly because of groceries. So,
Yeah,
and I don't know how much Target is making from the groceries. I saw that they're changing their business model. They're now more looking like a CVS. When was it? A few months ago, I've been at a Target that pretty much looked like a CVS or a Walgreens.
that is interesting, but it seems like retail investors, they don't care. because you could look at Kohl's. Kohl's is up too. KSS.
Yep, up almost
So
3%.
yep, and also Macy's, right?
Yeah, Macy's up almost 5% here. So yeah,
Nordstrom,
we'll see.
JWN.
JWN, Nordstrom. Oops, JWN is Nordstrom up what? Oh, 4%. Yeah, I mean, this were Walmart setting the stage, but all of them are reporting this week. So let's see what they will say. So I think Target will be the most notable one.
Yeah, yeah, no, absolutely. And hopefully, investors aren't setting up the stage for disaster.
Yeah, yeah. All right, TSM. Gotta talk about this. Now up 11.2%. So huge, huge move for TSM. Did you see that?
Yeah, the Buffett effect, right?
It is the Buffett effect. The 13F filings are out. And what are the 13F filings? These are filings for hedge funds who have more than $100 million under management, and they have to report of what they did last quarter. And that's where Warren Buffett said, well, kind of liked TSM.
Yeah, that. I mean, that's outstanding. We saw it with oh gosh, um,
Oxy.
Oxy. I wanted to say MRO, and I knew that was absolutely wrong. But yeah, same thing there. There was reports that he was adding positions, and that was confirmed. And look at that go. So we'll see if TSM can maintain. There was another one too. It looks like he picked up some Paramount.
Really? Okay. Well, they're up 10%. That's super
Oh,
interesting. I would
oh
not have
I'm
thought this.
I'm sorry. Oh, he raised his stake. Okay, so he added to Paramount.
Well, okay. I would not have expected this. So, I mean, when we see something like this, so I mean, Oxy has been a great stock to wheel on, and we actually did it a few times. So, not at these levels right now, but whenever it was close to the support level, we traded Oxy. So, what do you think right now? TSM, should we wheel this? Should we actually say, okay, let's go for it. Let's sell puts.
This is where we have a saying in the mastermind group: respect the lows. And in this, yeah, I think it's a huge plus. It definitely gets more looks when you know that Warren Buffett, with his track record and also just the money he could toss at a stock, is involved. But chart wise, this parabolic move after a clear downtrend doesn't excite me too much. He also picked up Louisiana Pacific, though. That's LPX. And I'll tell you what, this chart looks a lot better to me wheel wise.
Okay, because I mean, there's always two things when you're wheeling. I mean, first of all, the question is, okay, do you want to own this stock? And secondly, do you want to own it at the strike price where you are selling puts? I mean, right now, we don't see any puts that are popping up on the scanner to sell. But you're right. I mean, this is not this crazy parabolic move. So that might be a little bit more interesting if we can sell puts at the 52 level, maybe 53 even.
Yeah, too high now, too high now. But it looks like there's some decent support around 50, 52.50.
Yeah. All right, let's take a look at our positions. I mean, LVS. There we go. Super, super interesting. So our cost base is 46.86. Um, I was able to sell the 45 calls expiring this Friday. You have the 44 calls. And this
Correct.
morning, LVS surprised us a little bit of moving as high here as almost towards 45.
Yes, and this is where when we sell calls, typically 99% of the time, we're selling calls at our cost basis or higher. So in this case, we would be selling calls at 47 or higher. And if the stock rallies, then we could potentially roll or we get called away and we make nice money on the trade. In this case, we've been in the trade for a while. We've managed it. We flew a rescue mission. It's been down. It created this new lower range. There was ongoing issues in China, and this is one that we've managed for a while, and we're ready to move on.
Yeah.
And we've been able to take advantage of some pops and spikes on news that so far have had there's been no legs to that move. However, this looks a little bit different. And although I sold calls at 44, I do not want to get called away at 44 because, like you, my cost basis is around 47.
Right. So that's why we consider rolling it. And so this morning, I looked into rolling my 45s to the 46, and I'm trying to get 10 cents for this. So that's only 19% annualized, way less than the usual 60% we would like to see on the roll. But here I have 3,600 shares. So this basically means that every dollar that I'm getting called away below the cost basis cost me $3,600. So if right now I can pay $36 to potentially keep another $3,600 in premium, that does make sense to me.
Yeah, yeah. And I mean, I'm in a similar situation, Marcus, because I sold the 44. So you're in a slightly better situation, but I sold the 44. And I was looking at the possibility of rolling the 44 to 45 because I could roll out the 44. Maybe I get 40-cent credit, I think it was. But with the stock, if it pops above 45, and if I could roll to the 45, now I could make an extra dollar on that stock. Ideally, if the stock continues to move higher, we want to get the calls that we're selling close to that 47 level.
Right, right. Very similar situation for me in TPR. So I got assigned at 37 and I sold, I think it was last week or earlier this week, the 36 calls expiring this Friday. Also, this morning, a little bit of a move here. So we'll see. I'll try to buy back these calls for a profit. That is my plan right now. And then hopefully can sell the 37 because it seems that TPR has finally broken out of this range that we were in stuck for a few months here. That was basically between 30 and 33. So right now trading well above this. Again, if I get called away, that's not the worst thing because my break even is at 32.69. So I'm still making a lot of money on the trades, but I would have to give back $2,700 from the premium that I collected. So I'll try to see if I can roll these up to the 37 or if I'm able to buy those back and then sell the 37 for next week. So that is my plan here. Nvidia. I mean, this is where I'm probably getting called away. Well, we'll see. I mean, Nvidia has earnings tomorrow, so a lot of things can happen. So right now, my cost base is 160.91. So here I was able to sell calls above my cost base. And that's, as you said, what we do 90% of the time, maybe 95% of the time. So if I'm getting called away, I keep all of the premium that I've collected, plus make a little bit of money here on the stock. So, I mean, that's not the worst thing. And this will be really, really interesting to see of what's happening tomorrow. My break even is way down here at 142.92. So even if Nvidia drops back on earnings that they might report, I'm okay with that.
Yeah, that's looking pretty good. And I mean, earnings are a wild card, but I think you're in a good position, like you said, even on a pullback to continue with the trade and make some more money.
Yeah, and when we looked at the earnings analysis here for Nvidia, the price move reaction probably on the seventh day, almost 60% of the time it moved higher, 40% of the time it moved lower, and on average it's a move higher of around 9%, also moved lower of 9%. But if you consider this right now, I mean, a 9% move lower would be, let's see, where's the current price at 162? So this would be $16. Let's go to 3 months chart. So that's what, 146. There we go. Still above my break even. So I'm absolutely okay with this one.
Make some
Google.
money.
Google is another stock that we own. And I mean, making a move, making a move. I mean, this is where probably you are assigned at a lower price. So your cost basis is 103.50 and your break even is even lower. Can you sell any calls here? What does it look like?
Well, this is where I could definitely sell calls above my break even, but because this is still a relatively newer trade, it's behaving as I would expect a trade that doesn't go in our favor immediately to actually behave. So I cannot sell calls at 104 to get the premium that I want. Although I'm watching this, I think if we get a move closer to 100, I'll be able to sell 104 calls for next week. So I'm keeping an eye on this one for sure.
Yeah, so right now you would get 10% annualized, and our threshold when freshly selling calls is 30%. For rolling, we are considering 60%. But so, yeah, needs to move a little bit more, but it is definitely moving in the right direction. So you will be the first to sell calls, and then for me, it will probably be a little bit later, but definitely moving. So for today, I'm definitely keeping an eye on TPR and LVS just to see if I can roll my calls up to get closer to my cost basis. And that's pretty much what's happening for today because on the scanner, not a whole lot going on. I mean, Hawk popped up because I think they had a downgrade. And that's what's very typical because on an up day, that's when we try to sell calls because we get a lot of premium there. On a down day, that's when we want to sell puts. And the markets are still right now, I said, oh my gosh, they just keep rallying. If we go to a 5-minute chart of the S&P, I think the Nasdaq is getting a little bit stronger here. So they're hanging in there, but still up more than 2% in the Nasdaq, up 1.5% in the S&P.
Can't complain.
All right. No, it's all going really, really, really well. By the way, if you would like to learn more about this strategy that we are using here, which is called the wheel strategy, take a look at this video here. So this is where I explain the wheel strategy in a nutshell in less than 15 minutes. Check this out. This gives you a better idea of what we are doing, and then we'll see you again in tomorrow's video. Have a great rest of your day.
Happy trading, everybody.